What does it mean when you receive a CP2000 notice? It's kind of scary. In the upper right-hand corner of the notice, it will say CP2000. And what it is a notice of proposed tax due. First thing I need you to do is pick yourself off the floor, because anytime you receive mail from the IRS, it's incredibly intimidating and scary. I deal with these folks every day of the year. You do not need to be afraid of them. In certain circumstances you do, and we'll talk about that. For the most part, a lot of times these CP2000 notices can be made to go away if you know what you're doing. When you're looking at someone who's been dealing with CP2000 notices for 30 years, and we have a great success rate of minimizing or eliminating them. Let me tell you everything you need to know, whether you hire me or somebody else. It's good to understand what you're dealing with. First of all, the IRS spends a great deal of money designing software and information systems that compare all information received from all third parties against the return that you filed. Now, when you first file your return, they treat it as presumptively correct. Whatever tax you say you owe, they treat it as that. Whatever payments you make, they treat them the same. And what winds up happening is a computer, sometimes 6 to 8 months after the return is filed, comes in, looks at it, and says, wait a minute, we have information from a third party that's not included on this return, like a 1099, 1099K, 1099S, even a W-2. Any type of reporting of income that's done by third parties is compared to your return, and what the government's looking for is items of taxable income that you may have omitted. Now, don't panic. It could have been an error by your tax preparer. There could be a lot of reasons why this has happened. It's my job to deal with it. I need to tell you, though, the whole process of fixing CP2000 letters is complicated. Okay, we'll get into why. So an IRS computer comes along and generates what looks a lot like a bill. To tell you the truth, most of the time what the IRS wants is for you to mark yes on that notice that you agree with the changes and send them a check. The whole system's kind of designed to make it easy on the government to collect this money that they believe they're owed. Now, if it turns out you don't believe you owe this money, you're in for a little bit of an uphill battle. If you hire someone who knows what they're doing, it's winnable, but it's a process. Let me tell you about certain types of CP2000 notices that we see all the time. One of them is involving cryptocurrency. If your coin brokerage sees transactions that indicate to them that you're potentially running a business and you're getting paid in cryptocurrency, they can mistakenly issue a 1099K, which tells the government that your cryptocurrency transactions are taxable revenue in relation to a business. Now, when the IRS computer goes in and looks for that 1099K, it's looking at the Schedule C is the most common place it looks for it. It looks for it on the revenue line. The computer wants to see that you have revenue in excess or equal to what was reported on 1099K from the brokerage. Well, if you dutifully reported your cryptocurrency on Schedule D, knowing that they're capital gains transactions, that they're not sale of inventory through a business, that you're just trading in cryptocurrency, even though you reported on Schedule D, even though the revenue is the exact same, you show proceeds off of the sale of cryptocurrency above or equal to the 1099K, the government doesn't get that. The IRS computer is too stupid to figure that out, and you have to hire someone like me to fix it. It's a total pain in the rear, and I've seen some huge bills in excess of $3-4 million that I've been able to make go away, and I'll show you how that process works. If you sell your house and your tax software says this is a non-taxable transaction because Internal Revenue Code Section 121 kicks in to make any gain non-taxable, what happens is sometimes the software leaves the transaction completely off the return for some reason. IRS can't tell that you've picked up the 1099-S that they received showing the sale of the personal residence. Guess what? They don't give you any basis. It doesn't matter what you paid for the house. It's not going to give you credit for it. It doesn't know about it. It only knows about the revenue, and it'll treat the entire 1099-S as taxable proceeds from the sale of a capital asset. It'll calculate a capital gain, and you'll get a bill. What you also need to know is that most state governments communicate with the federal government. They share information. And if the Fed comes along and adjusts your return, it's just a matter of time before the state you live in comes in and tries to do the same thing. Also in an automated process. So you need to fight this fight, otherwise you're fighting two fights, not one. All right? Here's another one I see quite often that can be fixed is you're getting paid stock options as part of your employment. They're treated as taxable. You wind up seeing them reported on your W-2. There's withholding paid in against it, and it's treated as a taxable transaction. Well, if your employer, or more likely the brokerage they're doing business with, issues you a 1099-B at the end of the year for stock option sales, the IRS computer comes in looking at Schedule D for taxable sales of stock and doesn't see the revenue reported. Gives you zero basis for it, sends you a bill. That can be fixed. We fought that fight many times. Okay, here's where you might get a little bit more nervous. If you're a non-filer, okay, what happens is the government comes along and says, wait a minute, we're getting all this reporting of revenue and you're not filing returns. We're getting W-2s, 1099-Ks, 1099 divs, anything under the sun, pension distributions, 1099-Rs. And guess what? They'll make up a return for you because you're not filing. That's called a substitute for return, okay? And unfortunately, this is kind of a strange process because eventually the government may come in when you don't respond to the CP2000 notice and try and reduce the CP2000 notice to a collectible number. The CP2000 in and of itself isn't really a collectible amount due. It's a proposed amount due. Now you need to understand this. The government can be completely wrong on the facts, completely wrong on the law, and as long as they issue what's called a 90-day letter to you, if that 90-day period goes uncontested, in other words, you do not file a tax court petition, which is your only recourse when you're faced with a 90-day letter, whatever amount they say due is due, all right? And they can begin collection on that immediately. Also, if you're a non-filer, I need you to be aware of a concept called SPIES evasion. Okay, it's ordinarily a misdemeanor when you've got tax returns and taxable income that you should be filing and you're not doing it. That's 1 year in jail per count. There's a potential 6 years of counts that could apply. 6-year period of time is open to the statute of limitations. 6 years in jail if they wanted to. It's pretty rare. Now, if any of the factors of SPIES versus the United States are present in your fact pattern, they can ramp up misdemeanor non-filing to felony non-filing. If you're hiding assets in other people's names, if you're keeping your money in other people's bank accounts, if you're hiding your identity, if you're hiding the location of your business, if you're doing anything that the Supreme Court in SPIES versus United States said was intent to evade, they can ramp up those misdemeanors to felonies, 3 to 5 years in jail per count, 6-year period of time, you could be looking at 30 years, theoretically. Okay, so what happens if you get this CP2000 notice and you agree with it? Well, I'm sorry you had to listen to all this. It's real short. All you do is check the box that says I agree with it, send it back in, and the government will assess accordingly and begin collection action. You also should amend your state return to agree to the changes the Fed proposed, or you're going to have a problem down the line. So, after gaining an understanding that I've given you about CP2000 notices, if you find yourself not agreeing with the amount of money the government wants from you, it's either a less number or no number, you need to understand how the process works and how someone like me can help you. First of all, they ask you to write them an explanation and give them back the CP2000 notice with the explanation of why you don't think you owe the amount they are asking for. You know what? I'm really good at writing these letters, and I don't mean to insult anybody at the IRS, but I'm always telling my staff, act like you're trying to explain to somebody in 3rd grade why you're right and they're wrong. I mean, make it really simple, really clear. Don't use big words. I'm not saying the IRS is stupid. I'm just saying if you have that mindset that you need to take complicated issues and make them simple so that you prevail, it makes us effective advocates. Sorry if anybody at the IRS is insulted by this, not my intention. Well, How good is the IRS at responding to these CP 2000 notices? Well, to be honest with you, during COVID, it was almost non-existent that you'd even get a reply. Okay. After COVID, frankly, the way I feel about it is if the amount is $30,000 or less, they don't even want to respond. They don't even want to look at it. Okay. Every time you write to them, you're writing to a service center. There's a whole bunch of different people in there, and if you're writing for the third time, you can't expect the person who's reviewing the third response to know what the first and second response said. Okay. So what I always tell people is include the first response, the second response with the third response. Give them everything every single time, and don't really count on them to spend too much time trying to figure it out. Ultimately, what I find happens is the government ignores you, and at some point sends you a 90-day letter. Okay? Now this is frustrating, especially if you're paying your CPA or your tax attorney to write all this correspondence, that the government doesn't respond to it. Okay? Ultimately, what's easiest for them is issue a 90-day letter. They're hoping that you don't take the bait, that you don't file a tax court petition, and frankly, they win, you lose if you don't. I explained that earlier. Let me warn you about something I see happen all the time. While the 90-day letter period is ticking, you're still corresponding with the correspondence units on the CP 2000 unit. Maybe you get on the phone, maybe you talk to somebody at the IRS that says, aha, I understand why those tax options shouldn't be taxable. And you think they've actually fixed the issue for you and did something behind the scenes. What you need to realize, and to tell you the truth, a lot of IRS personnel don't even realize this, is after a 90-day letter is issued, that is a separate, distinct legal issue, and anything they do to fix the problem isn't going to stop the forward progression of the 90-day letter. Okay? They can tell you, hey, I can fix this for you, don't worry about the 90-day letter, and you go off a cliff in a barrel because you listen to them. And you're dealing with an organization that I believe everybody that works for the IRS, or most of them anyways, has their heart in the right place, and they're not trying to hurt anybody, okay? But it's an organization that also has case law that basically says they're not responsible for their own negligence. So if they say something that hurts you, you can't sue them for it. So don't fall for it. If you get a 90-day letter, your only recourse, I don't care what's happening behind the scenes, what your CPA tells you, what your tax attorney tells you, separate, distinct issue, you need to file a tax court petition before that 90-day letter goes by, before that 90-day period of time goes by, or you lose, no matter even if they told you I fixed it. And to tell you the truth, it's the unauthorized practice of law for your CPA to file a tax court petition. They shouldn't be doing it, okay? And it's funny, you can do it, you can represent yourself pro bono, but I don't recommend that. You're at a distinct disadvantage trying to deal with the government in litigation when you're not an attorney, especially if you're not a tax attorney, you're not trained in dealing with this world. And training isn't enough, you need to have experience. I have 30 years of it. So, why are you better off hiring the tax law offices of David W. Clausen to deal with your CP 2000 issue, even over your original preparer? Well, most preparers aren't also tax attorneys. I happen to be a tax attorney and a CPA with a master's in tax and 30 years experience. I have a very efficient machine that I've built here. I've got very well-trained personnel, and we deal with CP 2000 issues all the time. And to tell you the truth, we have a 100% success rate if we have to file a tax court petition to take on the government. We have never failed to win in tax court. Let me tell you how I define a win. The fees you pay me is at least as great as the reduction in tax. In other words, you're ahead because you hired me. And sometimes you might pay me $15,000 to take on the IRS, and I've made $3 million go away. I don't take a percentage of the tax savings. It's illegal to do so. Well, if you hire me, you get attorney-client privilege. It could be your original preparer who's government witness number one against you, who actually knows that you didn't give them an item of taxable income. They're likely to be on the witness stand against you if the government decides to prosecute for you not reporting that income, all right? Now, when would this be relevant? Well, I mean, it happens a lot in businesses where you underreport revenue purposefully, the 1099-Ks come in showing that you received more cash than you actually recognize as revenue, that's a potential criminal issue. All it takes is $10,000 of unreported income in an audit or a criminal investigation for that issue to bring in a technical fraud advisor to determine whether they're going to prosecute you or not. You don't have attorney-client privilege with your original preparer. Matter of fact, you have a conflict of interest with your original preparer. Original preparer needs to protect their reputation. How zealous do you think they're going to be in protecting yours if they can actually go down in flames because of what happened on your return? You don't want to work with them. We also have work product privilege, meaning everything we do in the background is privileged if it's prepared in anticipation of litigation. It's potentially your original preparer's incompetence that may have led to the CP2000 notice in the first place. Matter of fact, you might be suing them for it. Okay, I can talk to you about that, not that I recommend it. What you also need to realize, if you get a CP2000 notice, you may have the same issue in multiple tax years, and you need someone like me to sort out whether we're going to deal with that or not. Here's the biggest reason why you would want to hire someone like me. I've already alluded to the fact that our firm's policy is we'll write 3 letters to the IRS CP2000 unit trying to make this thing go away through normal channels. All the while I tell everybody this is probably going to wind up with a 90-day letter and I'm going to have to litigate. Most of the time we win our appeals just on the strength of our tax court petitions. Our tax court petition is so clear and so succinct and lays out the facts and the law in such a way that the appeals officer, whose duty it is to determine who's right and who's wrong and whether the government actually wants to bring this to litigation or settle it, their job is to figure out what the truth is. We make it very clear why you should win and they should lose, why the CP2000 notice is wrong. Okay? Now, it doesn't always mean 100% of the tax goes away. Quite often there's something due. And we always try and be fair to the client and fair to the government. And I think we have a reputation for being fair. And I think that's one reason the IRS doesn't hesitate to settle with us. I mean, overall, they have a 98% settlement rate. Right? They don't like stepping in a courtroom any more than you do. It's expensive for the government. It's expensive for you. Our firm has never lost in tax court. I mentioned that earlier. And I mentioned this earlier, we ordinarily win just off of the tax court petition. Here's another reason why you might want to hire our firm to deal with your CP2000 notice issue. Okay? If you can't pay what you ultimately owe, we run a holistic tax practice, meaning we want to help you with all the problems that tax causes you. Figuring out how you're going to pay for that tax liability if you don't have the money is also part of it. We're a one-stop shop. We also want you to know that we have a national tax practice. Okay? As a licensed attorney in California and a CPA in California, I have the right to deal with federal tax issues anywhere on the planet. If it's a state issue, I'm probably not the right person if that state is outside California. I know the right people to refer you to. After hearing all this, if you're still skeptical, don't take our word for it. Why don't you go on out to our testimonials section of our website and read what our clients have to say. The firm has an A+ Better Business Bureau rating. I personally have a perfect 10 AVA rating, which is the highest rating you can achieve as an attorney. I have a very rare set of credentials, experience, and training. I'm simultaneously a tax attorney, a CPA, and I have a master's in tax. I have 30 years of experience. I have a staff of very well-trained, efficient CPAs and CPA candidates. A few of my staff also have master's degrees in taxation, beyond being just certified public accountants or certified public accountant candidates. Thank you so much for the opportunity to earn your business, and I look forward to speaking with you. Dave Klossing.